Cool. Okay. Well, good afternoon, everybody. I'm Jeniffer Saavedra. Thank you so much for coming in today. Thank you so much, Jose, for setting this up, and Phil for giving us this amazing information. He was very in depth, to be very honest with you. A lot of people have to pay an expert to learn the information he provided. It was very thorough, very in depth. So, any other questions you have, keep Phil's information, keep Jose's information. So I'm Jeniffer Saavedra. I'm a mortgage loan officer. I've been a mortgage loan officer for 11 years. And so I actually work for Forward Mortgage. I'm with a brokerage. And a huge difference in working with a regular lender and a broker is that we actually have access to all of the banks that you need. So we have all types of financing, whether you're buying your first home, your second home, or an investment. We actually have access to a lot of different banks. And the beauty about that is that we actually get to shop around for your rate. And let's say, God forbid, a loan doesn't work out because of the scenario in one bank. The capability that we have in transferring it to another bank is amazing. Also, we get to shop for your interest rates. And now, with interest rates being cut by quarter recently, it's going to be awesome because we're really noticing some changes in the market and we really expect a lot of opportunity. So, if you're already a homeowner, this is the time you really want to get all your ducks in a row, get your money really according. And I'm going to give you some quick information. I'm not going to take too long, but I'm going to give you some main points that you're going to take away, some key points that you're going to take away so that you could be prepared for when you're making that step. So my license number, as you can see, is 1109342. That means that my fingerprints are with the FBI and that I took a mortgage license test to produce as a mortgage loan officer. All right, you don't pay us for our services. We actually get paid by the bank after your closing, after you take place. You make your purchase happen. So again, our little logo, brokers are better because we belong to a network of brokers throughout the nation. And my company is Forward Mortgage. If you want to scan that QR code either now or at the end, that's actually the application link. But I have another QR where you could get this whole slide and you could take it home with you if you want to review it again. All right, so some of the points that Phil actually went into, I'm going to go into a little bit deeper. So when I talk to my customers, whether you're a first-time home buyer or you're, again, second home, or you're looking to make an investment, some of the most important points is you need to be able to have your income ready. You need to have your documents ready. The four magic points here is that we're looking at your job, your income stability. And this could be if you already have an investment property, maybe you have a primary home and you have an investment property, or maybe when you bought your first house, you actually bought a multifamily home. If you bought a multifamily home, that's awesome because now you're not just a first time home buyer, but you're also getting income, rental income from that primary home. So it could be multiple ways. Everybody has it set up differently. The goal is that when you come to see your loan officer, you want to make sure that we're going all of your income documentations. This is going your tax returns, your pay stubs, your W-2s, your 1099s. If you have a business, sometimes it's layers of documents. We're looking over sometimes 4 sets of tax returns if you have a business. And people ask me, well, why do you need so much information? Well, the bank and the government that oversees all of the lending regulations, they want to make sure that you're qualified to take this loan out. So again, if you have a business, we're going to collect those tax returns from the business and all the paperwork. If you have K1s, if you have an LLC opened, we need all of those certificates of donation. Assets, where do you have your money? So when you're coming to buy it as an investor, typically the down payment is anywhere between 15% to 25%, sometimes 30%. It all depends what kind of property we're buying. It all depends if it's going to be a multifamily home. It all depends what kind of loan structure we're doing. So you definitely want to have your money. The big thing with investment property is that they do not allow gifts. So as a first time home buyer, typically your minimum down payment can be anywhere between 3 to 5% down. And it's awesome if you have no money. If you have 5 members of your family and they want to gift you money, that's awesome. You get that money and you use it for your down payment. But when it's an investment, they're expecting you to walk in with your own capital because you're ready to become an investor. You're telling the bank, listen, I'm ready to become a boss. So they want to know where you have that money, right? So in the same regard, we need to show them that money's been sitting in a bank for about 2 to 3 months in a bank account, that there's not a lot of movement really. This is something huge, a big conversation I have with people. The first phone call is make sure your money's been sitting either in a CD, a regular stock account, it doesn't matter where the money is really, but you want to show stability for the last couple months of that money. That means that you haven't been taking money in, you haven't been taking money out, that it's just been stable, or putting money in, but not a lot of weird transactions that they're going to question, that's going to cause issues later down the road. Liabilities means any debt you have on your credit, or possibly that you don't have on a credit. If you have you had a divorce, or if you have a child that you're responsible for and you have to pay child support. These are things that may not pop up on your credit, but you're still responsible for, and we need to put them on your 1003, which is your uniform residential loan application. The bank's going to take a formal application, just like when you bought your first home, they're going to take a formal application on you on these 4 things. And the application's actually about 3 pages long, and it asks these 4 things, but a lot of different boxes in all weird forms, okay? And then housing debt. So again, if you're coming in to buy an investment property, you have a home already, that home actually does have debt. You have to pay taxes on that home. Maybe you had repairs on that home. Maybe you had a loss. You have insurance on that property. All of these things are actually calculated again in the uniform residential loan application. So we will ask you for your home insurance policy. We will ask you for maybe your tax bill for the property itself. We'll ask you for your mortgage statement, your current mortgage statement. We'll ask you questions about when you bought the house initially, and we'll collect paperwork from when you bought the house initially, because sometimes we need records, and sometimes there's weird questions that pop up between the credit report and the banks now, because of so much fraud that took place in 2008. There's just a lot of checks and balancing that they do on the back end with the underwriters, where they're going to go in and really just ask us questions. They have systems where they're going to check that alerts come up. And if alerts come up on your name or addresses, all of that stuff, we need to be able to, one, be patient. Okay. If you're going to be a business owner, patience is huge. A lot of the times with this process, some customers, they want to make things happen fast. This is something that really you got to be patient. We got to collect all the documents, go one step at a time, and make sure that we just have all our paperwork in place so that we can provide it to the bank. And if they have a question on something, that we're able to, yes, I have this document, here you go. So keep your document, that's huge. Keep all your documents. FICO score, when you're an investor as well, when you're buying an investment property, they actually have a little bit of an expectation of you being a more responsible consumer. So yes, we could probably get you a loan below 680 credit score, but I would not recommend a score below that. Really, the interest rates are more favorable to somebody with a higher credit score, higher down payment, somebody that doesn't have a lot of debt. You're walking in and you are asking for more debt. So you want to show, hey, I've been a responsible consumer for the last 2 to 3 years. I've been paying all my credit cards on time. I don't have a lot of debt. I don't have a lot of car bills. Like if you have a Mercedes Benz, that's $1,000 coming in debt every single month. You got a house, you have credit cards, and you're coming in with the minimum down payment. That's not as favorable as somebody that's going to put 30% down. They have an 800 credit score. Maybe they have a 401k. Maybe they have some stocks. So again, you always want to show responsibility in the paperwork so that that can impact not only streamlining your loan quickly, but also getting you a better rate. So the secret sauce, I always tell my customers, again, have all your paperwork ready. What you want is you want to have high income, high assets, low debt, a high FICO score, and then the documents you need to get started. And I would recommend, if you guys want to take a picture of this, Again, I like to explain it in layman's terms, like if it was kindergarten, because this is a lot of information. And sometimes to dissect it, if you don't do this every day, it could be really confusing. But the bank really, in a nutshell, is going to ask for these paperwork. They're going to see, where's your ID? Who are you? Are you actually the person that you say you are? Because at closing, they're going to, every step of the process, they're going to see, they want things to match, right? They're looking for errors. That's what they're doing. They're trying to catch errors. That's what the underwriters want, because again, fraud, they're looking to prevent fraud. So passports, identifications like driver's license, stuff like that. For your W-2s, if you've had multiple jobs, we want to collect those W-2s from the last 2 to 3 years. 1099s, if you're an independent contractor, like an Uber driver, something like that. You're gonna be, that means you're self-employed. Most of the time you have a Schedule C. So not only do we need your multiple 1099s, if you had multiple independent contractor jobs within the last 2 years, sometimes people will give me a whole pile of 1099s. It all depends what kind of jobs you have. So you wanna have that stuff organized. Recent pay stubs. If you do work for somebody, if you have an employer, we're gonna want the freshest 30 days of pay stubs. Now, what I tell my customers all the time is, if you start a process for your mortgage loan and you haven't found a house 3 months later, expect me every time that I speak to you to ask for your pay stubs. So from now until you close, save your pay stubs in a folder. Keep them, because it's not me giving you a hard time. It's that the moment that we submit that application, the bank's gonna want the freshest of the documents. That means the bank statements. Let's say we're expecting a closing for December, they're gonna say, okay, that means that I need all of the bank statements for November and October and current December, and I want pay stubs for November. So keep all your documents in a folder as you from beginning to end. It doesn't matter if they ask them for the documents or not. Keep them, because it's just gonna make your job easier. It's gonna be way stressful. Now I want to go into loans and the differences of some of the loans. Phil covered a huge amount of the loans. So what I focus on, as mortgage loan originators, what we really focus on in regular conventional banking is some of the government loans. Now we do have options for non-QM loans, which I'm going to get into as well. But our biggest focus is 1 to 4 unit conventional financing, residential financing. Anything that is anything that is 5 units or higher is considered commercial use. That means if it's a building, or even if it looks like a house, but if it has 5, it's zoned for 5 units for living, that's already considered commercial, even if it looks like a house. So that means it requires a different type of financing. All right, so government loans is everything that is anything for your primary home that you're coming in, you're asking for FHA financing, you're putting 3.5% down, or maybe you're coming in for your first home, you're doing 5% down and you're going to do a conventional loan, or it's your first home and you're putting 15 to 20% down. That is called a qualified mortgage, and we could get you financing from FHA, conventional, USDA, and VA. Those are the 4 predominant types, okay? But now we have alt-doc loans. That means if you already own a home and now you're looking to buy a home, but maybe you don't have the income particularly to show, because maybe you're a business owner, or maybe you have a particular situation, or maybe you want creative financing like Phil was talking about. We have other alternative options that aren't necessarily the cheapest, but get you to the goal. So a lot of people, they'll come and they'll say, but why am I not getting a 6.5 interest rate like I see everybody's? When you're buying your first property and it's a primary loan, interest rates will always be much lower. Expect a higher rate no matter what if you're buying an investment property, especially if it's an alternative doc loan, because a non-QM loan means it's riskier on the fact that all of the documentation that you're providing and what the bank is requesting from you, they're actually being a little bit lenient because it's more creative. So this could be somebody, for example, Phil said DSCR. I don't know if you guys remember him mentioning debt service coverage ratio. That means that you're showing the bank that the property is generating enough income to pay for itself. But as long as it generates at least 1.25 more over the top, then you're eligible to get that financing. But you still need to provide the paperwork. You still need to go through the uniform residential loan application, answer all the questions. So at the end of the day, there's some people will come to me and say, hey, but I thought this was like zero doc, like all. No, at the end of the day, they want to know who you are because they want a proof of repayment that you're going to be able to repay that loan back. So with debt service coverage ratio, it's amazing for an maybe second time, third time investor where maybe if you have a job and you have a business, but the business isn't generating a lot of income, and maybe we can't really support on a regular qualified mortgage, we can't support the income portion. But maybe you have that 30% down and your credit is strong and you don't have a lot of debt. And you found a property that actually generates enough money to pay for itself. A debt service coverage ratio could be a good option. Just understand that all of the alt doc loan options are case by case, and your loan officer should be able to walk through all of the options with you on that case by case basis, depending on the situation. Because you could also go regular conventional financing as an investor and just do your regular 20% down. In some cases, some are a little bit more paperwork with the QM, regular qualified mortgages, but at the end of the day, it's just important that we take a look at the property itself and see what the property is going to generate in income, and then see if this benefits you or not. If it doesn't, we're going to make the best suggestion for you. All right, so I'm going to break down a little bit more on the qualified mortgages and then non-qualified mortgages. So again, I was mentioning the FHA, VA, USDA loans. That's qualified mortgages. That's typically somebody that's coming in as a first-time home buyer. But you could also buy a property with conventional financing as an investor. But the requirements are anywhere between 15 to 20% down. And you have to show proof of every single piece of paper document wise. That means that your income needs to be able to absorb all the debt. And with non-qualified mortgages, sometimes we're able to go that DSCR route, like I was talking about. So you can see at the bottom on the where it says mortgage options right here, we got DSCR. If you live outside the country, maybe you have a family member that maybe has good money in another country and they want to invest in the United States, we have loans for those people where they come into the country and it's actually very simple for them to buy an investment property. Loans requiring only 12 months US credit. That's again for foreign nationals. And then interest only loans. There's also loans where it's only interest and you're like, wait, why would I buy something where I'm only paying the interest and I'm not paying into the capital? Maybe you're going to hold that property for a certain amount of time. Maybe you're like, let me buy the property, let me close with this interest only loan so that I could acquire the property and then I'll just refinance it later. So as Phil mentioned, there's exit strategies. And a lot of the times, like he mentioned also the BRRRR method, where you'll buy and then you'll refinance later so that you could pull out that equity and buy another property. Well, interest only loans are part of that. And that also includes hard money loans, which I don't necessarily do. I refer those out, but those are also considered interest only loans and they're typically 12 months. However, with those type of loans, you need to have an exit strategy. What does that mean? That you can't come into the loan expecting you're going to keep that loan for 30 years. Some of the investor loans, you have to be ready for the next step. What am I doing in 12 months? Am I going to rehab this property within 6 months? And then what am I going to do afterwards so that I can acquire financing? Or am I going to just sell it and just get rid of the property and then that will wipe out everything? So these are a lot of different things that we would go over individually depending on what level of investment you're looking to do, because every single person's at a different level in their life. Some people are still buying their first investment property. Some people are ready for their second or third. Or maybe you just you want to buy a condominium as your first investment. Maybe you don't want to buy a building right now. Maybe, so every single person is in a different situation, walk in their life. So that's why it's a case by case basis, and you'll go over it with your loan officer. How to get started. You're welcome to scan this QR. You all have my I know Jose printed it and put it in your folders. That QR should take you to my 1003 loan application. You scan it, it goes into a portal. That portal is your uniform loan application where everything is compiled from beginning to the end of the transaction, whether you're buying for your first time, second time, or investment. Basically, this takes you to the link to apply. You start your portal, you fill out all the information on there. You gather all the documents that are here. By the way, everything needs to be scanned. Oftentimes people will text me pictures in different things, like they'll just, no, all of the documents that you submit for a mortgage, everything is going to the bank. If things aren't scanned properly, the bank will reject it and we'll have to start the process all over again. So I always recommend and remind people multiple times, every single document that you see here, you will need to properly collect it, properly scan it. If you don't have a scanner at home, I always recommend go to Staples, tell them, hey, I don't have a scanner and I need to scan these documents to this email, or I need them in a folder, or can you email them to me so I could upload them somewhere? But have all your documents properly scanned, because if the bank can't read them or they're not clear, we're just gonna have to start the process all over again. So again, some things I already mentioned. This is the only thing we actually accept as a picture, and we do prefer a picture because we want a high quality look, is a driver's license. And if you're a US citizen, most of the time we just need a driver's license. If you're not a US citizen, then we need your driver's license, and then we need a proof of form of how you're legally in the country. Do you have a visa? Do you have a work permit? Do you have a do you have a different legal status? So whatever legal status you have, we need all of the cards. And typically we also recommend that you have the last 3 or 4 years evidence of how you've been in the country legally. Tax returns, we need all the pages properly scanned for the last 2 years. W-2, same thing, everything scans last 2 years. So we're in 24, so they're gonna collect anything from 2023, 2022. You want it individually scanned. Now, if you're a business owner, like I mentioned previously, they're gonna want not just your personal taxes for the last 2 years, so that's already 2 set of taxes, but they're also gonna want 2 set of taxes for your businesses, plus any certificates of formation, plus any evidence of profit and loss, plus any other evidence of the business itself generating income. They're looking at, if you're applying for this loan and you're using your business income, how are you going to show me that your business generates enough money to support this loan you're applying for, and be able to cover any current debt that you have right now in your name. So going back to the secret sauce slide that I had, is we want low debt, high income, high savings, assets, right? The only thing we really want is low debt. That's the only thing. And really, and realistically speaking, these documents show that. That's what it is. If you already own a property, so again, if you are looking to buy an investment property, you own a property, you're going to have to provide your recent mortgage statement for the property you currently own. You're going to have to provide that homeowner's insurance. So these are all things you're going to have to collect, have them properly scanned. You're going to want to know what kind of financing you had, because this will impact that conversation you have with the loan officer as far as products go for this new property you're buying. So try to see, you could call the bank and say, hey, do I have an FHA loan or conventional financing? Oftentimes when the loan officer pulls your credit, they'll be able to see if you had an FHA loan or if it was conventional. But it always helps if you already know, hey, I did put 3.5%, I have an FHA loan. So that means the loan officer understands that there's a lot of conventional products that you'll be eligible for your second home. Pay stubs. If you have a regular job, we want to have those pay stubs. I think I mentioned that already. and that's pretty clear. Assets, if your money is coming from multiple accounts, you want to have 2 months of statements from every single account where the assets are coming from for this transaction. And you want to have a notepad as to how is my money adding up, so that when I have this conversation with the bank or the loan officer, hey, I have $20,000 in a CD. I have $30,000 in stocks. I have $20,000 in XYZ. My money's coming from here. Here's the 2 months bank statements for every single one. We want properly scanned all pages, PDFs of every single account, so that again, we could take all that information, upload it into the system, and the bank can properly review it. Without that, it's extremely difficult to properly get started, because this means that as the loan officer, if I don't have all of this, and this is, I'll swear to you, this is the hardest part of my job, that when I talk to people, people want answers right away. But unfortunately, if you don't help me with this to get started, I can't really take everything and present it to a bank and say, hey, this is the scenario I have. What kind of rates do you think we could get? You think we could get approved? You think we could actually move it to this type of option? Without this, it just makes all of our situations harder. So have all your ducks in a row. Again, evidence of other debt that's not on your credit report. If you had a divorce and you have alimony, if you have a child that you're responsible for and you have child support, 99% of the time that stuff does not pop up on your credit report. Have your documents from the court that show divorce. Have the documents of how much you're paying for child support, that you've been paying on time. All of these things are necessary for this process, because this is a debt that you're responsible for, and that debt will impact your final numbers for the bottom line of what you're going to qualify. Because at the end of the day, you need to qualify for X amount of loan that you could now take to borrow on a property that you're looking to purchase. It's not like you're gonna go locate a property and you're like, oh, I already did the numbers on this property, you know, I'm gonna rent it out and I'm gonna get this amount of money, and I found it's in a great location. And no, you have to be able to acquire the loan itself to purchase the property. So that's huge, and that's why this is the most important step above any other, because without this, Jose can't do his job. He can't search for properties. He can't say, all right, well, your purchase power XYZ, and we can actually look in this area. Also, keep in mind, taxes are huge when you're purchasing a property. The more you expand your search when you're searching for a property will impact your monthly payment tremendously. I have this conversation every single day with my customers. A lot of people want to stay in a certain area. They're closed up because maybe they grew up in that area, XYZ, they want to stay there. But the fact that if you move to another area, you might have the possibility of buying the same house for probably 10%, 20% lesser value. That's going to impact your payment in a positive way, where maybe your taxes could be cut in half. That's going to impact your monthly payment in a positive way, maybe even generate more income if you're an investor. So keep that in mind. The more, especially right now, the way things are so expensive, be open-minded of expanding your way out to South and other parts besides the tri-state area. Other than that, thank you so much for joining. I do have a QR code for the slide, but it's cut off. I don't know why it's cut off.